Hello, this is Jordan. This video is being recorded on Sunday, January 29th, 2023. Thank you so much for joining me. In this video, we're going to take a look at the week ahead for gold and silver and our own expectations. And it is a tough call heading into the week. I mean, these are the monthly candle charts for gold and silver, by the way. We do have 2 days of trading left, so these are not these charts can obviously change, but I'm thinking, last week we saw gold, at least on my screen, it came within 20 cents of 1950. So let's just say it hit 1950. We were talking about 1950, 1960 as resistance. There's also a potential inverse head and shoulders pattern. I don't know if I've talked about that on these videos yet, but that measures to about 2020 in gold. So those are the resistance levels and targets I'm looking at right now. If you put a gun to my head, I would say I'm not sure gold. Gold may have peaked last week. I'm not sure it's going to go above 1960. And a big reason for that is you have technical resistance here on the monthly chart. 1950, that was the monthly close roughly a year ago. Maybe that was March. I'm just guessing March or April, one of those months. So 1950. You also have 1900 as a significant monthly resistance level. So if we do see a sell-off, it's possible that gold could finish the month, again, in 2 days below that 1900 resistance. So I'll be keeping an eye on that. We'll see. I mean, if gold is able to find strength in the next couple of days and close close to 1950, then maybe it's going to have a chance to get to that 2020 target, or at least 1960. Now, looking at silver, I mean, this is the monthly chart, but if you look at the quarterly chart from silver, you can just see around $27 is really, really significant resistance. I mean, here looking at the monthly chart, you can see from, the middle of 2020 into 2021, you kind of had, 3 failures there. I think it's around $28. So this is the monthly chart, but then also the lower high, the pop that we had early last year on the invasion, on the monthly chart, you can see that close was, I think, about $25. So looking at the monthly chart, $25 is stiff resistance for silver. And silver, I think the peak price recently was, I want to say like $24.60 or something like that. And as we know, silver has just done nothing in the last month. I mean, look at the candle in silver. Look at it compared to gold. You have a big white candle where, gold, I mean, that's a super bullish candle, where gold, I mean, it's a big candle, and gold is almost closed near the highs of the month, at least up until now. Again, there's 2 more days left. Whereas, we look at the past month for silver, it basically, it hasn't really moved. It's basically at the same level. So with gold moving higher, silver's had all these chances, and that's why, if you put a gun to my head, I would be surprised if gold, at least right now, is able to move above 1950 and 1960 in that resistance. We're also coming up on Fed week, and we've seen a rally in the S&P 500, and it's broken above the 200-day moving average. It's broken that that trend line resistance that everybody's talking about. Maybe we see some more buying in the S&P, but then it reverses to the downside because the Fed talks tough. Even though they're only going to hike 25 basis points, we know they're going to want to talk really tough because all the indicators are showing that there's less tightness now in the market. If you're looking at credit spreads, those are fine for the time being. They haven't blown out like you'd expect before a recession. We've seen a big rally in the S&P. I mean, some commodities have rallied. And so looking at all those factors, the Fed will want to talk tough coming out of this meeting. And, maybe you want to fade risk assets. And so at least in the very short term, that's why precious metals could get hit. But anyway, focus on the monthly close coming up. That'll be on Tuesday, and we'll see where these finish. So I'm hoping to see gold hold these levels. It'd be nice to see it close above 1900. And lastly, looking at the miners, they sold off to end the week. GDXJ I think it came pretty close to 41. I mean, the measured upside target is, I have been saying 42, but it's in the 41s, the mid 41s. And so, again, I don't know if we're going to see one last push up here to the upside. You know, that might happen if gold can get to that 2020 target. You know, if not, we've probably seen, you know, the end of this rebound. So with that said, you know, that's my, you know, I'm leaning towards that position where, you know, if I was heavily invested or fully invested, I would not be rushing in to buy right now. And so that's why on this chart for GDX and GDXJ, you can see, look at the blue arrows. Even just looking at, if you're just looking at the price action, like I'll just, you know, taking a look at it and picking out where the support would be. So looking at GDX, obviously 30 would be the first support, but also, you know, somewhere in the 28, maybe the mid 28s, 29 or so. You know, I see strong lateral support there. So looking at the 200-day there with the arrow, that's at 28. GDXJ, I mean, doing the same thing, looking at that, you know, initial support at 37. There should be really strong support at 35, maybe 35.50. So looking at the 200-day, 34.79. So there are clear support levels. There's a confluence of support in GDX and GDXJ just above the 200-day moving averages, which it looks to me like they're starting to flatten out. So give it another couple weeks and maybe they're going to start to tick higher a bit. So that those are, you know, levels, at least if we're going to correct and we're going into it very soon, those are levels where I think you want to be a buyer. But obviously we'll see how everything develops. SILJ didn't quite move up as much as we anticipated. 200-day there is at 10, you know, we'll call it 1030 just to round down. Good lateral support at 10. So that's where one would want to be bullish, at least from a short-term perspective. So there you go. That's my outlook for the week. It'll be, you know, and if this plays out and we start to see a correction in precious metals, we'll see if they can hold above these 200-day moving averages. You know, gold as well. You know, we'll see if silver can hold above, you know, if it can hold $20 in that area and not give the whole thing back, you know, like we've seen so many times in recent years. But, I mean, I think that I don't think that's going to happen. I'm leaning towards you know, that this is a new bull market and that they'll find that support if they're going to start to correct. Okay, thanks so much for tuning in. Let me know what you think. Leave a comment. I know there was a lot of unequivocal comments here, but look, sometimes we just don't know. There could be a short-term turning point, and that's just what I want to get across here, and I'm leaning towards, you know, I think that's going to happen. Other important thing is the monthly close on Tuesday. So keep an eye on that, and I'll talk to you guys again in the next video.